Hello traders, this is Blake Morrow with Forex Analytics, and you are listening to the week ahead video for February 19th, 2017. And I'm gonna have to admit, this is a tough video to make. Not because it's hard to produce, it's just a hard video to do analysis for, because this has been it's a very challenging place that we're at in currencies, and it's kind of make it or break it, if you will, for a lot of dollar pairs. So, for that matter, it's going to be a little bit difficult to give you analysis on the dollar that really is actionable at this moment. But the good news is there's some cross rates that I've got my eye on as well. So first and foremost, let's go over to the traffic light page of Forex Analytics. And what you're going to notice is when you go through, you just look, I mean, you can just take a glance at the major dollar pairs here. And aside from the Norwegian krona, we've got some pretty good bearish setups there, or at least all the different types of analysis, whether it's candlestick, macro, basic technical, harmonic, Elliott wave, all have been pointing for lower prices this week, which we've gotten in the dollar Norwegian krona, but it's more or less where we're at right now. And if you look at the dollar index, and I'm just going to take you over to the dollar index first and foremost, I'm going to take you over to the weekly chart. And if you see the weekly chart, you'll notice that we have this head and shoulder pattern setting up. Now, it's a setup. It's not even close to triggering because we're not near the neckline. You can see the necklines right here in the highlighted area. We're basically carving out the right shoulder. But this week, midweek on Wednesday, we get the FOMC meeting minutes, which maybe that's the indication that's going to tell us or push the dollar towards the 102 resistance, or maybe down at the 100 level, which would be the support down here, the highlighted area, where you can see how we're bouncing between 102 and 100. But the market's looking for a hawkish Fed. Everybody has, just kind of like last year, they have expectations of the Fed raising rates multiple times this year. We had those same expectations last year, and they obviously didn't transpire. And I don't know if it's probably too early to assume the same thing's going to happen this year. But as you know, we're also led by a Fed chair who's pretty dovish and pretty careful. So, expectations may be high right now to raise rates. Could they change as the year goes along? Sure. And, looking behind the curtain and seeing reading, the FOMC meeting minutes might give us a better clue this week. But we are bouncing around. You can see it right here. Real key technical levels. The question that we all have is, are we going to continue higher, or are we going to start a reversal and possible false breakout on a longer term basis on the dollar index? And I get very mixed signals when I look at an instrument that, in my opinion, is something that really tells me and helps confirm what the dollar is going to do, and that's looking at gold, because gold's the inverse relationship of the dollar. And if you look at the gold market, and this is the daily, you'll notice that we might have set up a double top. We've got major resistance here. This is all around 1250. 1,250. You can see the previous support here. We also hit it as resistance before and earlier, and now we're hitting it resistance again. And that really just tells us it's significant. And if we break above 1250, that's bullish, which would be bearish the dollar. But at the same time, we could be setting up a double top. If we break back below 1220, now you got a double top and you got a reversal. That would be dollar bullish. So, we're at a very pivotal area in the dollar, pivotal area in gold. And so for that reason, I don't have a lot of clear indication. If I even go over to the dollar yen, you can see the dollar yen. This is a daily chart here in the dollar yen. We had this broken trend line. We broke above it. We were rallying. Now we come back and we tested the breakout point, and we're actually at the 618. You can see the 618 retracement. So it's kind of do or die for the dollar yen too. Do we bounce from here, or do we break down and really start to get some, bearish momentum started? And again, it's a very pivotal area, and I think maybe after Wednesday, since this is a holiday week for the US, and we have a holiday on Monday, which is President's Day. Markets might be a little light as they open up on Sunday. This is just all going to be probably decided after Wednesday. So for right now, it is hard to do analysis for dollar related pairs. However, I want to show you one currency pair which, in my opinion, is on my radar right now. It's the euro pound. And the euro pound, you'll notice that we have a daily chart that shows this head and shoulder pattern. And you can see, actually, if you go over to the other, here's the other daily chart, you can see a little head and shoulder inside of a head and shoulder pattern. So we are approaching the neckline, and that's around 84 pence. There's also a 200-day moving average. Those two levels, if they break, you have to look for some downside momentum. Now, I always look for, well, what's the reason? We do have second estimate GDP also on Wednesday out of the UK. If those numbers come in a little hot, well, then maybe that is the catalyst that drives us towards the 200-day moving average, maybe even below. We did have some weak data that came in this last week, especially with retail sales out of the UK, which was, dismal. And as we approach Brexit, will economic activity really slow down as, some businesses pare back on things before the hard Brexit that's going to be here in the coming months. So we'll see. But if second estimate GDP doesn't show any slowdown, maybe that's a positive economic surprise for the UK, which might drive the euro pound lower towards the 200-day moving average, maybe towards that neckline at 84 pence. And that is something that I'm personally paying attention to, at least this week, on a week that we don't have a whole lot of data. The RBA Governor Lowe is speaking a couple of times this week. I also will take you over to the Aussie New Zealand, even though we don't follow this on Forex Analytics. At this point, we have initiated this pair in the past, but we may initiate it in the future. We had a big breakout of this wedge, and you can see this downtrend line. It's coming, it's come into play, and we've been knocking our head up against 107 on the Aussie New Zealand. With private capital expenditures on Wednesday night, Thursday morning in Australia, the RBA governor speaking a couple of times. If there's some hawkish comments, if capex, private capex numbers come in better than expected, maybe that's a positive surprise and drives the Aussie higher. Maybe the Aussie New Zealand even breaks out above 107. You notice when we get a big rally like this and we consolidate and we're not pulling back, there's always something that I say: what does not go down usually only has one other way to go. So in other words, we had a really sharp rally here. We are just consolidating. The longer we stay up here, the more apt it is for an upside breakout, and we could start making a move towards 109. That's entirely possible with the Aussie New Zealand. And even though, again, we don't follow it on Forex Analytics at this moment, we might put it back on the pairs that we follow in the future, which we have done in the past with the Aussie New Zealand. And also, one last thing before I go, guys, if you haven't taken advantage of trying the Forex Analytics system for 10 days, it's only $1. You can sign up right on the homepage right here. Make sure you do that. You guys and gals have a great trading week. Enjoy your holiday if you're in the United States and you're off on Monday. I know I might be with my family, but I will be monitoring the markets at all times. You guys have a great week. Thanks for listening in. Bye-bye.